So we had a strong up move in the stock markets in the US. Not so much, for example, with China stocks. But what is next? Gold is going sideways. Oil is still waiting for the breakout. Dollar is consolidating. It's a difficult time. But there's one swing trade that's looking good right now, that's working. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so let's start with a look at the markets overall. This is the S&P 500, and as you can see, we had a strong rebound move, and we had a positive day yesterday. And the thing that we see is this is a follow-through day of the up day on Monday, so that's positive. Now, so far, this is nothing more than a reaction to the losses. This is not a bottoming formation, but it could turn into one. So, as you can see, we're fighting to retake the 200. It's this line right here. That would be big, and that would actually be the first signal that the worst is behind us as far as the down move, and that this is real structure building here. This is a breakaway gap which won't be filled, and that the correction phase is over. It is important to remember that it is also the end of the quarter. So obviously, institutions are massaging the market right now to make it look good, to get their bonuses, to reel the retail investors back in. Now, let's take a look at some factors that are important for the markets, and we start with the dollar. As you can see, let me zoom out and then zoom back in. This is what the situation of the dollar is overall. We have the sideways trend that has been going on since 2022. We broke out of it in the Trump rally. This turned out to be a gigantic bull trap. We broke back into the channel, to the midpoint of the channel, which I told you about weeks ago. And now I've been telling you we're going to consolidate around. There's going to be a reaction to it. Now we're seeing this consolidation. Interestingly enough, so far, the rebound has not been as strong as I anticipated. So we're seeing continual weakness in the dollar. We're below the 200 still. We'll definitely test the 200 from below. But midterm, clearly the direction is down, and this lower band of the sideways channel, that is the target zone. So there's really nothing to do in the dollar right now. Oil. It's a quick one. Yeah, it looks good, it's getting better, but really nothing is happening, right? The deciding factor is the breakout of this descending triangle formation. Are we breaking out to the upside, which would also mean we'll break the 200? Great. Or are we breaking down from this important support zone that has held since 2021, which would be very bearish, and then we're literally looking for oil prices around $40 a barrel, this zone right here. But so far nothing has happened, so we don't need to do anything in the market. Okay, let's take a look at gold real quick. What's going on with gold? That's been the darling, that's been the story, that's what we like. Well, really, nothing is happening, as you can see. All right, we're consolidating, but it is a consolidation over time. There's no selling pressure in gold, which is good. But the real story right now at the moment is not in the precious metals, not in the commodities, they'll come. The real action is in the Mag 7, and that can't really surprise you, because I've been telling you about this in the last video that it was coming. Look at this up move in the Mag 7 ETF from support. This looks great. We're about to take the 200. That would be another bullish signal that will get more investors into the Mag 7s. And if the Mag 7s move, then the US markets move. Then the flows, the capital flows that have been going into Europe and into Germany specifically, will come back to the US. Now let's look at the charts of the stocks that I really liked. Amazon as a trade looks great. And what are we going to do? We're going to stay in this trade. It's working. It looks great, right? As you can see, it looks even better than the Mag 7 ETF because it already confirmed the breakout over the 200. This is a great swing trade. We're going to stay in it. You're going to put your stop either right below the 200, or if you want to give it more room to breathe, around 188.50, which is below the low from March 18th. Google, Alphabet, looks great. Not as good as Amazon, and I told you that on Monday, but still, great up move, great trade. Right? Now let's compare this to Nvidia. Look at this, it's fine, right? But not as good as Amazon or Google. Let's look at Microsoft. Looks fine, right? But not as good as Amazon or Google. Now, Meta, which was my third favorite play from the Mag 7, the candle, yesterday's candle, not the greatest, right? Still looks good. Bounced off this triple support zone of the 200, of the uptrend, long-term uptrend, and the horizontal support zone. So that's significant. But Amazon and Google right now, the better play. Obviously, the most dynamic of them all is Tesla. It always is, right? But that's just a really tricky stock to trade. If it breaks above the 200, then yeah, okay, you might want to go long, but this has already run up quite a bit. Remember, about a week ago, we were at 225, right? We're at like 288 now. So this already ran. I like Amazon the most. My second choice would be Google of the Mag 7, but this is clearly where the action is right now. Some of you will say now, well, what about the commodities? What's happening in the commodities? Well, in commodities, we see really three trades. We see copper keeps on running. It's crazy. There's no weakness in copper. Everything gets bought up as far as the physical metals is concerned. So that's the number one physical metal right now. Let me show you the chart of copper real quick. Now, is it overbought? Yeah, it is. But we have learned a long time ago, right? When the commodities run, they really run. So this is what copper looks like. Look at this. We broke out. We made a new high. Really impressive. It's significantly overbought, and that's why I wouldn't jump on it and go along with it. But it's the best commodity right now. The other stories that we still see major buying in big gold mining and silver mining stocks. And with big, I mean senior producers, junior producers. Explorers still don't do much. What does that tell us? Institutional money is keeps flowing into the mining stocks. So that's good. But if gold is consolidating, we might get better entry points in some of the gold and silver mining stocks. The third area that I really like is the deglobalization commodity trend. specifically for strategic metals, which include rare earth, and commodities that are necessary to build arms. So this is a fairly new sector that I'm really getting into more and more, and we'll be talking more and more about it. But for example, a stock I like in the rare earth sector is MP Metals. They have rare earth in the US. As you can see, this is a beautiful looking trend that I really like. Long base, right? Almost 2-year base. They're about to break out, but way above the 200 uptrend. This looks great. If you're not in this yet, I would open a half position right now. And if the breakout is confirmed, you're going with the second half. And if we break down, then you buy the second half there. So these trades, because there are no commodity markets for it, like titanium, tungsten, these small commodities, you have to, rare earth commodities, you have to play them through stocks. And there are not that many of them out there, right, that have great projects in North America, preferably the US, or Europe, or Australia. That's where we're looking with this trade, with the deglobalization trade. And I'm going to come back to this, and this is going to be one of the topics of 2025 that we're going to harp on, because we're going to make a lot of money with this trade and this development, especially in the arms section and arms sector. But that's it for today. Have a great day. Talk to you later. Bye-bye.